Have you ever noticed how rent in one part of the city seems to be going one way, while your friend just snagged a killer deal just a few miles over? It's a super common puzzle, and today we are going to break down exactly why the rental market can feel so uneven. It's a really frustrating feeling, isn't it? You hear news about rent softening, but your own landlord isn't budging. It can honestly feel like you're playing a game, but nobody ever told you the rules. But what if I told you there are rules, and once you understand them, you can actually use them to your advantage?
Here's the most important thing to get your head around. The rental market isn't one giant ocean where all the ships rise and fall together. It's really more like a collection of small, separate ponds, and each one has its own little weather system.
So, how are we going to make sense of all this? Well, we'll start with the big picture, this idea of one city, many markets. Then we're going to dive into what makes each neighborhood tick, what I call its demand engine. After that, we'll get into the building's hidden story, which is a big one. And finally, we'll talk about where you have leverage and your practical takeaway from all this.
Okay, let's really dig into this first big idea. Most of us think of the city's rental market as one single thing, right? One giant pool where the water level, the average rent, goes up or down for everybody at the same time. But that's just not how it works. It's so much better to picture it as all these little, separate ponds.
And each of these neighborhood ponds has its own unique economic personality. Some are really stable, some are more volatile. So when a citywide economic shift happens, when the overall economy kind of catches a cold, some neighborhoods might just get the sniffles, while others get a full-blown flu.
So what is it that makes the weather so different in each of these ponds? Well, it all comes down to something I call the demand engine. This is the force that's constantly pulling new renters into a neighborhood, and it's what keeps prices up, or when it sputters, what sends them down.
Just think about it for a second. Why do you live where you live? Is it because you work in a specific industry nearby? Or maybe you go to the local university? Or maybe you just love the vibe, the parks, the coffee shops, the restaurants? Whatever the reason, you are a part of that neighborhood's demand engine.
So let's imagine a scenario to see how this plays out. Picture neighborhood A on the left. Let's say it's a huge tech hub. If that industry takes a hit and hiring slows down, what happens? The rental market feels it almost immediately, and rents can drop pretty significantly. Now look at neighborhood B. It's got a really diverse mix, a hospital, a college, maybe some tourism. If one of those sectors slows down, the others are still chugging along, keeping that demand engine running. That's why its rental market is just so much more stable.
But here's where it gets really interesting. Because even if you pick the perfect neighborhood with a super strong, diverse demand engine, the story isn't over. What most renters don't realize is that the specific type of building you're looking at has a massive impact on your rent. Location, location, location is true, but it's only part of the story.
This quote says it all, really. You can have two apartment buildings right across the street from each other, and their rents could be moving in totally different directions. It's a classic case of comparing apples and oranges, and if you don't know the difference, you could be missing out on a great deal.
So what's going on here? It really comes down to who owns the building and what their business goals are. On one hand, you have the big, new high-rises. They're usually run by large professional companies. They think like an airline, using dynamic pricing software to adjust rents constantly. Their number one goal is to fill every single empty unit fast. On the other hand, you have older, smaller buildings or single-family homes. These are often owned by an individual or a small family. Their goal isn't just to fill a vacancy, it's to find a reliable, stable, long-term tenant. It's a totally different mindset.
And this is where you, the renter, can really start to gain some leverage. Once you understand what's motivating the landlord, you can figure out where the negotiating power really is. Let's put ourselves in their shoes. Imagine you're the manager of a brand new 200-unit building, and you have, say, 30 empty apartments. Every single day those units sit empty, you're losing money. The pressure is on to get them filled. Now imagine you're a landlord who owns a single condo. If it's vacant, it stings, but you can probably afford to be a bit more patient and wait a few weeks for the perfect tenant at your ideal price. That difference in urgency is everything.
So, what does this actually mean for you when you're apartment hunting? It means that when the market starts to soften just a little bit, it's those big new apartment complexes that are almost always the first to start offering deals and concessions. They're feeling that pressure and they need to get people in the door.
Okay, let's tie this all together. Let's boil it down to a simple, practical strategy that you can use the next time you're looking for an apartment.
Okay, here it is. Step 1, analyze the neighborhood's demand engine. Ask yourself, is this area heavily dependent on one single industry? If that industry is looking a little shaky, that could be an opportunity for you. Step 2, focus on the building type. If the market is cooling, your best shot at a deal will likely be in those newer, larger buildings. They're the ones who have to react fast. And finally, step 3, look beyond the monthly rent. Sometimes the very best deals are hidden in the concessions, things like 1 or 2 months of free rent or waived amenity fees. Do the math over the course of the lease. You might be shocked at how much you can save.
So here's the bottom line. The rental market isn't just a lottery where you hope to get lucky. It's a system. It has rules, and now you know how they work. You're not just a passive renter anymore. You're a strategic player who understands the field. So the next time you're out there searching, you'll be able to look at a neighborhood, look at a building, and ask yourself the right question. Where is my leverage?